Last time we spoke with our next guest, he was quite bearish on gold, but with the uncertainty that has emerged post-Brexit, he now says the metal could climb to 1,400. Joining us now is Soc Gen's head of metals research, Robin Bhar. Robin, good to speak with you again.
Good to be speaking with you as well. Thanks.
So, Societe General is now agreeing with other major banks here and expecting gold to hit 1,400. So, this has really changed your forecast. I know you were previously looking at 1075 gold by year end. How has the picture really changed here fundamentally for you, Robin?
I think the heightened uncertainty for a extended period is something that will support gold. We've already seen quite widespread, pretty heavy volume buying of gold since early Friday morning European time, just after the it looked as if the out campaign was going to win. There was some heavy buying of gold in the Asian time zone on the Shanghai Gold Exchange and elsewhere, and then that washed through into London. And I think Brexit and the events likely to take place in coming weeks and months all suggest to us that gold will remain underpinned and could well trade towards the $1,400 level, particularly as risky assets are getting hit quite severely. By that I mean the equity markets are down, the Dow is down another couple of percent or so, and obviously other asset classes.
So is 1,400 what you're looking at for year end or short term here?
Short term, this would be a level that we would think we would get to in coming weeks. Whether that remains a level by year end, to be honest, I don't know. I don't think anybody can really forecast what's likely to happen because of the so many uncertainties that we're faced with.
It's really hard to call gold levels, as you say, Robert, in this really uncertain environment. So you're based in London. Tell us a little bit about what the sentiment is like right now for you.
I would characterize sentiment as pretty downbeat, very gloomy. I think fearful as well, because you know, some of the worst expectations that people had if the Leave campaign was successful, and indeed it's been successful. So I think people's worst fears are coming to bear. You know, we're already seeing that in terms of the global stock markets are down, other financial markets are in turmoil. Our currency as well, the pound sterling, you know, has lost a tremendous amount in just the last 48 hours or so. So if this is the beginning of a fairly cataclysmic period, then I think fearful is probably quite a good way to characterize it. We don't know what's going to happen. The Prime Minister has resigned. There is a lot of infighting with the political parties, both Labour and the ruling Conservative Party, and that's adding to the uncertainty. So anybody wanting to make plans, companies to invest in their future cannot, because of the huge uncertainty. So nobody can make any plans.
And Robin, post-Brexit, markets are now pricing in a chance of a rate cut by the Fed. Although only 3% see the chance of a rate cut in July, the markets are now pricing in a 20% chance in September. What's your take on this?
This is a reason why we have revised our view from, as you've mentioned, from being fairly bearish to more neutral or even mildly bullish, because we were bearish on gold because we thought the Fed would hike maybe 2-3 times this year. Now, if you say to me they're not going to hike, not even in September or December, so no rate hikes at all, you've got to be friendly to gold, because gold has a cost in holding it, a so-called opportunity cost. As rates continue to fall and possibly below zero, who knows, the opportunity cost of holding gold diminishes greatly. So gold then becomes more attractive on a relative basis because it's less costly to hold a long position or hold physical metal, and therefore becomes more and more attractive. And if you're telling me, or the market is telling us, the Fed is going to hold pat on rates, keep them unchanged, then relatively cheap money, accommodative monetary policies, who knows, more QE from the Fed. This is all supportive, extremely supportive. I can't stress more strongly, highly supportive of the gold market.
Robin, thank you so much. Thanks for joining us on the line from London. Robin Bhar of Societe General. Thank you.
Pleasure. Thanks.
And thank you for watching this edition of Kitco's Gold Report. We'll see you tomorrow.